The views expressed on the following program do not necessarily represent those of this station or its management.
This is the Stockwell Roueche Show, giving you real-time information you need to make educated decisions about buying and selling in the world-renowned Twin Cities. Now your hosts and real estate experts, Jason Stockwell and Josh Roueche.
Good morning, Minneapolis, St. Paul. I'm Jason Stockwell with RE/MAX Results, and Josh Roueche, my partner, is out ill today. He wasn't feeling well this morning at all, so we encouraged him to come in, but then he decided not to because we don't want to, there's a lot of stuff going around these days, so you don't want to get anything and spread it around. So Josh, if you're out there when you're listening, hopefully you are better and you get well soon. Today, the topic of the day, and probably this time of year for a lot of people, is taxes. So we have a great show today. We have our guest, Keith Matson. He's a CPA for 35 years. Right, Keith? Welcome, Keith.
Thank you. Thank you very much.
We have Lisa Swanson, Envoy Mortgage here. How you doing, Lisa?
Great, thank you.
And Robin Hartle, who will be talking about the Home Expo coming up live next week. We're going to do the show live next week from the Convention Center in Minneapolis. So as far as taxes, everybody, it's a sore subject, a good subject. I don't know.
I just want to say, it is coming up on Christmas time, and this is really a bad subject.
Usually you go through the holidays and then you worry about it.
Exactly.
Yeah.
We just want to be merry this time of year. Not be depressed.
Well, hopefully there's a lot of news going on with taxes right now, especially when in regards to real estate. So that's what Keith and Lisa, I wanted you guys to talk about here today and focus on a lot. Even though it can be a sore subject, it's coming up. You're going to have to pay or file them or wait for your return or whatever the situation may be for you with your tax situation. But as far as real estate related taxes and taxation on real estate and things like that, there's a lot going on. A lot on the table that was on the table for the legislature to vote on to see if they would extend or pass and things like that. And Keith will talk about that. So Keith Matson, CPA, Certified Public Accountant. This is Keith. Is this just a little background on you? Is this your own office? This MNR Ltd. out of Lakeville. Is that your own?
Yep. Yeah, we've been in business for 21 years. My partner and I. So
awesome. And what are you busy now? This time of year?
Yeah, busy season. People always figure they know about April as a deadline date for our practice, and most CPAs, it really starts at Thanksgiving. Between Thanksgiving and the end of the year, we touch as many people we can, do tax projections, and I always say between now and the end of the year, I can change the score. After the first year, I'm just a scorekeeper.
Oh, good point, right?
Yep. And business taxes, if you own a business out there, you know that filing is due and payment is due by January 31st, right?
Well, March 15th for the filing of the corporate returns. What's due by January 31st is all the W-2s and 1099 filings, payroll filings and stuff.
And some of the stuff I've been reading in the news about... So, back to Keith. What's a little bit of history about you as far as you've been doing it a long time, you have your own practice. What's your specialty? I don't know anything about taxes other than I pay taxes and I see them.
Good thing you do.
Well, in general, we're a small business practice. We probably do about 300 entities and over 700 individuals, but half of those individuals are connected to the businesses that we do.
Okay.
The other half probably are people that have rental properties or partnership investments, and they have a little more complicated return. My staff always complains that they just want to do an easy return. and I always tell them that if it was easy, they wouldn't come to us.
Exactly, yeah. They'd go online or something like that and try to figure it out, which... Is that what those commercials come out where people lose so much money because they don't have someone helping them to find out what they can get? Or they try to do it themselves, right? Mm-hmm. It's like selling your house yourself. Why would you do it? Exactly. Why would you file your taxes yourself? You're not in it all the time. You don't know it. So I encourage people to hire an expert whenever you can if it's something that you are not an expert at. Because everybody has their profession and has what they're good at. So one of the things here that... Oh, Lisa, update from you as far as mortgage update. Anything exciting happening in the lending world right now?
Well, I mean, it's pretty similar to the last few weeks that we've spoke about. Rates are still just great. I mean, just such a good time to buy to maximize the amount of money for the amount of interest that you're paying over the life of the loan. But the week's really big news is that the Fed announced that they may adjust policy rates in a couple of meetings. And then the change could really lead to higher mortgage rates. So we've heard kind of things like that back and forth, of course, but that was the big news today. And the next couple meetings, rates really could be rising. So just like we've talked about, I mean, if you enjoy the payment that is set forth for you, if you feel comfortable with, the payment that your loan officer talks to you about a house you're interested in, right now is the time to act, and also to lock a rate down, especially if you're refinancing.
Really, and I would also say with the Christmas holiday and New Year's and all the holidays that are going on right now, eat, drink, be merry, and then call us after January 1st so that we can help you with Keith can help you with your taxes, Lisa can help you with your loan, Robin and myself and Josh can help you with your real estate purchase or sale.
Well, and can I just add this really quick? It basically says it's in the December outlook. Freddie Mac actually predicts that 2015 will be the best for home sales since 2007. Home values are expected to rise moderately too. So we've already seen, a rise in home values, but it looks like they'll be increasing as well. So Freddie
Mac has the crystal ball that I've been looking for, is what you're telling me.
They think they do. Maybe it's their prediction. There's no solid language in here, but that's their predictions. Yeah.
Well, that's a good prediction. I hope it's true.
Yeah. Right.
I read here a news bulletin. So to the tax issues that are going on right now, real estate industry applauds legislation approval of the housing tax provisions extended. Keith, break those down, or what that even means for us on what just happened here.
Well, the two extenders that impact individuals is the first, that they extended the discharge of home mortgage debt. If you had a home in foreclosure and your debt was forgiven, normally cancellation of debt is income, and in this situation for 2014 it's not taxable. Whether you're in bankruptcy or insolvent doesn't make a difference. It's just that event alone will not be taxable. So that was extended from 13 into 14.
And that's been going on for quite a while, right? Where they've had that, where if you are in a short sale or foreclosure situation, you are forgiven on the debt of that.
Yeah, ever since 07, 08.
Yeah. Okay.
Yeah, when the recession.
So that's extended for one more year.
Yeah, for 14. All the extenders are for 14 only, not 15.
Oh, really? So they're retro back to
they're retro for this year,
okay.
But there's nothing.
Interesting.
There's nothing for next year yet. That's the Wild West again.
Is that pretty typical that it's the Wild West going into the next year, that CPAs like yourself don't know, or the laws haven't been finalized yet? Is that normal?
Oh, yeah. Last year, Minnesota passed a conformity law to federal in March, and we had to go back and change all the filings that had been already filed before that. So that was Minnesota being late.
Okay.
The year before that, the federal was late, and the IRS wouldn't even allow you to file individuals till February 15th. I mean, so the IRS now is going to have to respond to this and change their software, and all the software companies are going to have to change their software, and it's going to delay busy season, and we're already dealing with the Affordable Health Care Act and all its changes. So this is just on top of all that. It'll be probably one of the worst busy seasons we've seen.
Sounds like lack of planning, right? So the government is not planning ahead. Is that what you're telling us, Keith?
Yeah, about midway. Yeah.
Do they ever?
So many words, right?
Yeah. Well, I have a brother who lives in the D.C. area, and he thinks the world revolves around Washington, D.C., and I'm sure all the senators are the same way. They have no reality as how these laws affect planning, business planning, or certainty, or people trying to react to it in an intelligent manner. But one point in the past 4 years, they passed a law. They will say we'll set it for 2 years so you have some certainty and know what's going to happen, and that's gone. So now, end of the year, they're changing it retroactive back to January 1st. So it's not good.
Yeah, and that's what I always get a kick out of is, not to, bash government or anything like that, but they encourage individuals to save and not go into debt they encourage individuals to plan ahead for the future, and we all know that that's fundamental. Those things are fundamentally good, but yet they do the complete opposite on both respects to those things. As far as saving and not going into debt, they do the opposite. And as far as planning ahead, they don't plan ahead. They just wait until the end of the year and say, "Oh, I guess we got to go back and do this for this." What happened earlier this year, and then you have no idea what you're going into next year. So that's very frustrating. But bottom line is, for this year, if anybody did go through a foreclosure or short sale, good news for them. They can have that debt forgiven, is essentially what it is, right? Not be taxed on that loss or that.
Exactly right.
Okay.
Yeah, and then the other thing that got extended was the deductibility of mortgage premium insurance.
Private mortgage insurance.
Right.
Okay.
So for a new home acquired, you either pay up front sometimes the mortgage, or you pay along the way. If you pay up front, it's deductible over 7 years, and if you pay along the way, it's deductible like interest. It's treated as qualified residential interest. It is subject to some income limitations. Your taxable income or gross income, I'm not sure which one. I can.
It has to be below a certain amount in order to take that deduction, just like many of the deductions that you're allowed to take.
Yeah, your AGI, your adjusted gross income, is the bottom number on the front page of your return. If that's under $100,000, then you get full deductibility of the private mortgage insurance. If it's over 110, you lose deductibility of that.
And that's usually in a case if you buy a home and then you put down less than 20% down payment, so you have a loan to value over 80%, then you're most likely going to have private mortgage insurance of some sort. And then that money that you're paying is just insuring the loan on a loss. So it's not really going towards any of your principal or anything like that. It's just like an insurance policy. If something bad happens, it kicks in. So that's good that is deductible, because many, many, many homeowners have private mortgage insurance out there. If they have FHA loans, if they have conventional loans without 20% down, which is a really good number of people. So,
well, and Jason, you just touched on it really briefly, but a lot of folks, I think, have the misconception that insurance actually protects the consumer. And we've heard the term PMI really regularly, but that actual insurance is really only protecting the lender or the investor in the case of default. So I just wanted to be clear about the actual insurance policy, because it's something that it's benefiting the lender.
It's benefiting the lender.
Yeah, so it should be tax deductible, right? I mean, it's
you
not,
would think so. Yeah.
Well, let's hope that changes.
Taxes. What is true in life? Two things for sure. We all know them, but we're here with Keith Mattson, 952-686-3510, 952-686-3510. Call Keith with any questions. We'll be back with more tax, fun, and some stuff with Robin Hartle. Thanks.
Santa here? I know him.
We're back. You're listening to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results. Josh Roueche, my business partner, is out ill today. Robin Hartle is here with Remax Results, former host of Home Time. We have Keith Mattson with Mattson and Radzi Ltd., Certified Public Accountants, and then Lisa Swanson with Envoy Mortgage. Our goal here is to give you information that you can use somehow, give you something out of the show that can actually help you in your tax situation, in life, in real estate, whatever it may be. So we're going to go back into the taxes and some of the things that passed recently that can help you as a homeowner out there. If you pay mortgage insurance, that you can now deduct that. Keith, there's a few other things that we talked about here just on break that people may or may not know, because we're not experts in the tax laws and what changes are happening. What are some of those things? For example, I'm under the impression that you can still buy a home. People did this a lot now in the 2000s, where you bought a home, lived in it for 2 years, market was appreciating like crazy, they sold it, took the profit without paying a tax on it. Is that still something people can do?
That is still there, but a lot of us, I'm older than you guys. A lot of us have old brains, and the old rules pre-97 was that you had a once-in-a-lifetime 125,000 gain exclusion. And in 97, they changed that to be $500,000 for a joint, $250,000 for a single, once every 2 years. So a lot of people right now are downsizing, and they're freeing up gain, and they're afraid it might be taxable because they're downsizing, and it probably isn't.
It is. So run a scenario on that. You have a couple that's been in a home for 20 plus years, let's say. They're downsizing, going into a condo or a townhouse, or moving to Arizona or Florida or what have you. We hear that a lot, and I'm getting calls from those people as well, selling. If you're out there, that may be you or your situation coming up here, or going into assisted living or what it may be. So they've been there for that long. They paid, I don't know, whatever they paid for the house, but then they're selling it now, and there's going to be say there will be $200,000 in gain from what they paid versus what they're selling it for now. How does that work, Keith?
Well, a lot of
are they taxed on that then?
No, the $200,000. There's two questions you have to answer. From the date of sale, you look back 60 months, and you have to say, did I own the house for at least 24 of the prior 60 months? Did I live in the house as my principal personal residence for at least 24 of the prior 60 months?
Okay.
So, and if you answer yes to both questions, your gain is excluded. So a lot of people.
I did not know that. That seems like a good one for people to be able to move and sell and not have to pay on that. And let's say they did have the house, and they then moved in the downturn of the market, let's say, and then couldn't sell for what they wanted, so they rented it for 3 years. Or what's the rule?
That's
3 years would be fine, but 4?
Yeah,
then
3 years and 1 day would be too much.
So it has to be 3 years or under.
Right.
Got it.
You have to look back from the date of sale and say, I lived in it for 24 of the prior 60
So that's
months.
very valuable for you out there if you have that situation or in that situation. That is good to know that if you have a gain and you don't want to pay taxes on it, don't rent it for more than 3 years and 3 years, period, because otherwise you'll be subject to that, right?
That's
so
right.
Let's say you did do that and you had a $200,000 gain. You rented it for 3.5 years, and then now you go and sell it. Well, that means it's now an investment? Is that what it goes under?
Yeah, you've converted it from personal to business, and now the gain is fully taxable.
Wow. That's good stuff to know. So, Keith.
But now it may be subject to rollover. At that point, you've converted it to a business property, and you might be able to defer the gain with a like-kind exchange.
So that would be like a 1031 exchange, or there's a number of exchanges, but the most common I hear is 1031. So you could do something like that potentially, but you couldn't live in that after you bought that. If you did do a 1031 exchange, you could not live in it, correct? Or should you never say cannot ever, right? There's always something that can be done, right?
If I take
Keith gave me an interesting look there when I said you cannot live in it.
There's a pause.
There's an intent issue at the time of conversion. So I do a 1031. It's saying I'm taking a business property, I'm buying another business property, and that's an intent at the time of conversion.
Yep.
If I now rent it, say for a year or so after that, I've kind of proved my intent. If I then move into it and convert it from personal to business, my gain is still deferred, but I have to live in it for, I think it's 5 years as a continuous living to convert the deferred gain into now a personal gain that could be excluded.
Okay, so that is something that you would need to talk with Keith about if you're listening out there and you want to learn more about that. Some stuff that people may not know or know how to do or what to do in that situation, or you're getting wrong advice where, like I have heard numerous times in this situation, wrong advice. So please feel free to reach out to Keith Matson, 952-686-3510, 952-686-3510. Changing topics real quick here. Next week, we will be live from the Minneapolis Convention Center at the Home and Landscape Expo on Sunday, December 28th, 10 a.m. The expo goes from the 26th to the 28th. There's going to be hundreds. It says hundreds. Hundreds of exhibitors, maybe 1,000. I don't know. But there'll be a lot of people there building, remodeling, decorating, landscaping, anything to do with your home will be there. Robin Hartle will be there doing... What are you going to be doing there? 2 seminars?
Yes, a seminar on Saturday at 1 o'clock. and that is going to be on move-up buyers. And there's a lot of those these days. It's actually driving the housing economy right now, which I think is going to flip over. But right now, the move-up buyers is really driving the real estate business. And then on Sunday at 1 o'clock, I'm going to be doing another seminar, and that's on landscaping for the ultimate curb appeal.
Nice.
Yeah, and that's going to be really interesting because I'm going to talk a lot about what landscaping that you can do to increase the resale value of your home. Talk a lot about plants and trees and the value that different trees can bring to your property and what you should look for in trees, and then also in the different plantings and native plantings and things like outdoor lighting and what lighting can do and how you can use lighting, and then the things that the needs, the must-haves, and then the things that you'd like to have. So the difference between the two. So I think that's going to be really fun. So join me for those seminars. Then I'm going to be signing autographs. I'll be in our booth, and we're going to do a lot of fun things in our booth too. And then, of course, we're going to do the live broadcast on Sunday morning.
And as far as the move-up buyers, you have said that you're doing a seminar on move-up buyers, and they're actually moving the market right now. They're the ones who finally, when the market appreciated, were able to actually sell their home for what they paid for it maybe prior, or enough to get out of it so they could move up. I mean, that finally has loosened. That was so what's the word I'm looking for? Was so just not there. There was no market for it. They were being pressed down so hard they couldn't get their home sold for what they needed to move up. So now that market has finally loosened up, and that's why you see new construction going like crazy too.
Right, and there's a big difference between that first-time home buyer and the move-up buyer. And they're two totally different personalities and two totally different motivations for buying. So I'm going to talk about what the difference is between that first-time home buyer and that move-up buyer, and the motivations for buying, and what that difference is. And, because a lot of the people that are going to come to the seminar are going to be those move-up buyers, and, those people are going to have a home, and those people are going to be like, well, I have a home and I'm going to be buying a home, and do I sell first and then buy, or buy first and then sell? We're going to talk about that as well.
That sounds like a great seminar. That'll be at the Home and Landscape Expo Minneapolis Convention Center next week, 26th through the 28th. Call Robin Hartle. She's with RE/MAX Results. Call her for your tickets or any questions, 612-790-4385, 612-790-4385. Lisa Swanson with Envoy Mortgage will also be there. Are you excited for this next week?
I am, yeah. I'd love to learn more. And I think we should add, too, Robin, with all of your knowledge, what a great real estate agent to have kind of in your back pocket, right? If you're thinking about buying a house or selling a home, somebody who's running a seminar, and I think we talked about, you've been on TV previously about home improvement shows. Wow, what a great resource to have that personal attention, right?
For the tips on what to do to sell and things like that.
Yeah, you don't have to go to a seminar. You can call up Robin directly and say, "May I list my home with you, please?"
Exactly.
And then go to her seminar and get some extra tips, right? So
there might be. This was a. Someone said there might be a hot tub seller there. Someone might be selling hot tubs there.
there's always somebody there selling hot tubs, and I love to go over there and look at all the different hot tubs. I love walking these shows, and when
they
I
have
was
everything, right?
My gosh! When I was with Home Time, that's all we did. Like Dean and I, almost every weekend would be at a home show somewhere around the country, signing autographs and doing seminars. And we would always, in between seminars and signing autographs, we'd walk the show, and we would always look at different things because there's always new and innovative things in the industry.
Yeah, new ideas. You're like, wow, I've never.
It's like, oh, I never saw this before.
Yep.
This is the coolest thing ever. It's like new ways to hang brick or whatever. And they come to these shows and they would display these ideas at shows. And we would always find something new and innovative at these shows. And we'd get so excited about stuff. And we would actually find something new at these home and garden shows, and we would incorporate it in our show.
Yeah, that's awesome. Call Robin Hartle, Remax Results caller, she'll give you tickets, actually. She will give you tickets. All you can do is say the magic word, please, I believe, or Merry Christmas, or whatever it may be. 612-790-4385, 612-790-4385. Call Robin. Next week we'll be at the Home and Garden Show. When we come back, we'll be talking more about taxes with Keith Mattson, and some tips for you and some other things that will help you, and more on the real estate market coming up here next year. I'm Jason Stockwell with Remax Results, and Josh Roueche, my partner, is out today. We're here with Robin Hartle, Keith Mattson, CPA, 35 years experience, and Lisa Swanson with Envoy Mortgage.
Feliz Navidad.
Feliz Navidad. I don't sing much. We're back. You're listening to the Stockwell Roueche Show. I'm Jason Stockwell. That means Merry Christmas in Spanish, actually, for those of you that don't know that. Anyway, we're back. It's Christmas week. We're having a great time. Everybody's excited for the holidays. And we're here with Keith Mattson, CPA, an expert CPA, 35 years, knows a ton of stuff. I'm actually going to have to reach out to him myself to hear about some of the stuff and see if I can take advantage of some of these things that he's talking about with taxes. So Keith Mattson is here. Lisa Swanson is here with Envoy Mortgage. Robin Hartle with Remax Results. And we're getting back into the taxes. We're going to get back into some useful information for you out there if you're filing taxes. So I'll let Lisa and Keith take it over because they both deal with a lot of the tax stuff that when you own a home and when you own homes, those sorts of things. It gets more complicated. You want to reach out to an expert like Keith, so make sure that these guys can take over. So Keith, what are some other things that can help people out there that when they have homes and they have things going on in their tax life?
Well, one thing I'd like to just put a word of warning out is family loans. If you're making a family loan and you're giving your son a mortgage, you're giving him a kick on the house and they're paying you back with the principal and interest. For that interest to be deductible, you have to record the mortgage. There was a court case this year where a mother loaned $400,000, the kids paid nearly $20,000 in interest, and the IRS disallowed it because the mortgage wasn't recorded.
Ouch.
So I always hear experts say don't do family loans. But this might be a reason why, maybe. I don't know. But anyway.
Could you talk to my kid?
Yeah. I think if you do a family loan for 0% interest, right? I mean, that's how can you go wrong?
So then
but
you're
if you're
not
paying
then
the interest, then
yeah.
So that could probably really.
So
vary.
the court case was a family loan. They were paying interest in over $20,000 in interest, and the whoever it was loaned to couldn't deduct that because it wasn't recorded.
But it was income to the mother. But it was not deductible to the kids.
Oh, so you got to record that, huh?
You got to record the mortgage in order to make it a qualified mortgage interest and make it deductible.
Good information.
Well, that sounds kind of like a double-edged sword a little bit, right? So the mom was getting penalized for the income she received, but then the kids weren't able to
Take the
advantage, right? That's kind of
Yeah, ouch.
but good warning. Thanks, Keith, because I didn't know that at all.
Yeah.
So very good information.
Yeah, the second thing is real estate taxes versus mortgage interest. The rules are just slightly different. Real estate taxes are deductible regardless of how many properties you're paying real estate taxes on. Taxes are deductible. Mortgage interest is only deductible on a first and second home. So if you have a first and a second home, a cabin up north, and you also have a timeshare, the timeshare wouldn't be deductible because you're already paying on two residences.
And you'd have to have mortgages on those, right? So if you bought a fourth home and didn't have a mortgage on it, then it wouldn't matter, but only if you have loans on them.
Right. Only two mortgages are deductible.
What about the property taxes? So if you have multiple properties, if you have two or three,
all the property taxes.
100%.
100%.
Okay.
Yes.
Okay. Good.
Not a
Good
limit
clarification.
there. And then this won't affect a lot of people, but the total amount of the mortgages cannot exceed $1.1 million. It's $1 million for acquisition and $100,000 for home equity, and any more interest you pay on debt in excess of the 1.1 is non-deductible.
On the two properties that you can deduct interest on, correct? Okay. Right. So if you have a $500,000 property and a $500,000 property, or $500,000 or $600,000, you're good. If you have $2 million properties for $2 million and you have mortgages on them, you're only going to be able to deduct $1,100,000.
Right.
the interest.
55% of the $2 million interest.
Got it.
Yeah.
Okay.
Is there an advantage with new construction for as far as taxes go?
The only thing right now is the builder, if he's building an energy efficient home, can get up to a $2,000 credit for building an energy efficient home. That goes to the builder, not to the buyer.
Oh, that's kind of a bummer.
How about if the buyer or a current homeowner installs some of those more efficient things, that energy efficiencies, then that following year, do they get to deduct that as well, or do they get the $2,000 credit?
Well, that was extended. That was one of the extenders, was the residential energy credit. That's only $500, and it wouldn't apply to new construction. It would only apply to older homes that are being retrofitted.
Okay.
So I'm going to butt in here. We've got a tax expert, 35 years in the business, Keith Matson here. He can be reached 952-686-3510. I hate to bring the subject up because it might be a sore subject for many people, and it's been run through the ringer many times. But what I'm hearing from a person who does taxes is that the Obamacare or Home Affordable Health Act is actually increasing taxes. Is that a dramatic increase, or is it just a small increase, or how? And who is it affecting, or is it affecting everybody, or how does that work? Just real quick breakdown on, if you can do a real quick breakdown on that. I don't know. Well, because we're starting to see that now, right? Finally, where it's kicking out, where the taxes are actually taking effect, right?
Yeah. If I don't know how to say this. A major employer who has health care coverage, group health plan, people probably are not affected. It's the same as it always was. They're getting their health insurance pre-tax. They're getting it as a tax.
So if you work for a big company and they have a policy, you're going to be the same.
You're going to be the same.
Yeah. But so how does the small company work? Say you have 20 people that work for you.
Well, in a small company, it all hinges on whether or not they have a group health plan or not. So if they have a group health plan, the employee is probably still where he was. If they used to have a plan where the employer said, I'm going to give you $200 a month and you go buy your own insurance, he can no longer do that. That $200 is now taxable to FICA, and his insurance, the employee's insurance, goes on Schedule A, where he probably doesn't exceed the 10% threshold. So he's basically increased his income tax because he has to recognize the income for the reimbursement, and he doesn't get the deduction on Schedule A.
Okay. So what's the alternative then for a small business of 20 people or so?
If there's not a group plan, they're stuck with these rules. It's very inflexible.
So from a tax standpoint, does it raise the business taxes or the individual taxes, or does it do anything with that? Or homeowners? I've heard that. I mean, there's all these things. You never know what is the real deal here, you know?
Mm-hmm.
Yeah, if they don't have a group plan, but they're trying to subsidize their employees somewhat, what the employer is incurring is he's incurred the FICA tax on the reimbursement, where before that could have gone through pre-tax. So that's the only change really to the employer, would be that he's now has to tax that benefit.
Okay.
The employee is getting a higher income tax on his W-2, and he can only deduct his health premiums on Schedule A, where he's probably not exceeding the threshold. So for him, the reimbursement basically becomes taxable, both FICA and income tax.
You make it, you're very mild-mannered, Keith, so you make it sound like it's not a big deal. So I'm thinking, what's the big uproar about it? It just seems like things are the same, right? I mean, what's all the puffing about?
Well, there's 150 million of us middle class people, and so those small numbers add up to big volumes as far as tax impact.
Oh, I got you. Okay, cool. Lisa, Swanson Envoy Mortgage. What are some things that homeowners can look out for if they're going to be filing taxes this year, and some of the things they need to prepare for here after the new year, I believe, or when the stuff comes out, right?
Yeah. Well, first of all, I just want to mention my license number, NMLS 261955. And I guess just to give consumers a heads up, when you are a homeowner, if you closed your loan within the year of, let's use this year as a perfect example, in 2014, you received something called a HUD-1 settlement statement. Now, that HUD-1 settlement statement is usually it's a legal document. There's a ton of lines, and this is really just the itemization of who paid what, where did your money go, versus the buyer, seller, title company, loan originator, all that. Where did your money go in doing that loan transaction? So there's a lot of those fees that actually can be tax deductible. So you'll want to remember to bring that to your CPA when it comes tax time. You can also look forward to receiving in the mail from your lender any interest, a document pertaining to any interest that you paid over that year, or private mortgage insurance will be sent to you in a form that you also want to bring to your CPA as well when it comes to tax time. So just be on the lookout for those documents when they come. Don't throw them out. They're very important. Make sure to keep them, and they're sent to you annually for a very good reason, because you can benefit to save money.
And the same thing goes with anything. Your tax return is only going to be as good as the tax person you hire to do it. So hire an expert, because they can actually save you money. A good realtor can save you money when you buy or sell. A good loan officer can save you money when you get a mortgage or refinance. So feel free to reach out to the experts, and we're lucky to have them here. Lisa Swanson, Envoy Mortgage, 612-990-2271. Keith Mattson, M&R LTD, 952-686-3510, 952-686-3510. And then, of course, Robin Hartle, Remax Results, 612-790-4385, 612-790-4385. Robin Hartle, Lisa Swanson, Keith Mattson, all experts that will be more than happy to help you and know the rules and what's going on and how to best serve you and help you with your any real estate or tax-related questions. When we come back, we'll be talking more about the Landscape Expo, a few little tips for you to do here over the Christmas week, and a couple more tax questions with Keith Mattson. I'm Jason Stockwell with Remax Results. You're listening to the Stockwell Roueche Show. We'll talk soon.
Their idea of Christmas, I gotta be here for New Year's.
Merry Christmas and happy holidays from the Stockwell Roueche Show. We're all here, jingle bells in hand, and we're rocking and rolling here. We got Keith Mattson with M&R LTD, CPA, Lisa Swanson, Envoy Mortgage. We're talking taxes. We have Robin Hartle here. So what we wanted to encourage you to do is come out in between Christmas and New Year's and visit us in person. So you'll get to meet Robin, Lisa, myself. Keith is actually coming too, it sounds like. So we'll all be at the Minneapolis Convention Center at the Home and Landscape Expo, December 26th to the 28th. So come on out, visit us, shake hands, say hello, have a cup of coffee. Maybe, I don't know if they have eggnog during this, or do they have anything? We can maybe bring some eggnog.
Yeah, well, maybe we'll bring some.
It goes on 12 to 8 on Friday. The 26th, 10 to 8 p.m. all day Saturday, and 10 to 5 p.m. on Sunday. And we'll all be there throughout the weekend with other partners and friends, and we will have a live show Sunday at 10 a.m. Call Robin Hartle again for tickets, 612-790-4385, 612-790-4385. And we look forward to seeing you there. There'll be us and a ton of other cool vendors and cool ideas for you for your home, especially with spring coming up, or the New Year coming up. Not spring, that's a while out, that's a ways out yet, but the New Year coming up, and the things you can do after the first of the year if you're preparing to do anything for your house, whether you're staying there or moving. Back to taxes. So we'll see you then at the convention center. Back to taxes. Lisa. Mm-hmm. Landlords, if you're a landlord out there, I encourage you to be a landlord, even though people hear all the horror stories and they don't like it. I still encourage you to be a landlord, because you have a huge tax advantage when it comes to being a landlord, right?
Well, right. I mean, and obviously income potential,
real estate,
property.
Yep.
But there are some additional tax shelters, pretty much because of your landlordship, I guess we could say. But
Keith, sorry to butt in. Yeah. Lisa's not a CPA. Do you use the word tax shelter as a CPA? Or is it a...
Right.
I have that as a bad term in my head. I immediately think of illegal scandal. Someone did something wrong. Tax shelter.
Well, tax sheltered, you can harvest capital losses in order to shelter income. So shelter itself isn't a bad word, but
It's just that we've heard it from all these,
Right.
yahoos that are doing stuff illegally, and they have a tax shelter, and we think of a negative.
So I used it incorrectly, though. Is that
I don't
a
know if you did.
confirmation?
well, yeah. Typically, the IRS attacks tax shelters that are, K1 and partnerships that are trying to be abusive, set up an abusive situation. But
But by being a landlord and taking advantage of the tax deductions, that are available.
Itemizations
Yeah.
and deductions. Yep, that's
Yeah.
going to be the better word. So,
But it is a shelter. It's
Yeah,
a
I
house
mean,
as a
yeah.
rental, so it might be a tax shelter for you.
correct. Yep. Okay.
well, typically, if you buy a rental property and it's cash flowing, you can figure you're getting to depreciate it, and depreciation creates a deduction.
Yep.
Yes. Well, and that's really what is that number 2
So
on
she has
my
the top
list,
10. We have a
actually.
top 10 list here on the show. Not copying Letterman by any means, but let's run down the top 10.
And it's not even funny. I'll just tell you that. But it's good tips.
Drum roll.
So the interest is deductible. The depreciation is deductible, as Keith said. And Keith, you can expand on that in a minute. Any repairs that are made to that property, because it's an investment, even if the person's going to live in the home 5 years from now, right? While it's being rented out, those repairs are tax deductible. So another benefit of owning a rental property. Local travel is tax deductible, probably to make that maintenance happen. Long distance travel is also tax deductible, probably to, what do you think, Keith? Maybe just it's deductible because if you're an investor, then you're constantly looking at properties or opportunities
Well,
there. I
if
mean,
you
why
have
do
a-
you think the long distance travel would be?
If you have a rental in Florida,
Yeah.
you're going down for some working days where you're going to rehab it, repaint it, fix the repairs, add cleaning up between rentals, whatever. Those trips are business related.
Sure. Well,
Yeah.
yeah, and then the airfare, the hotel
Yep.
bills, the meals, and all the expenses that are related
We
with
need
that shop as
right
well.
now a rental in Florida.
Oh, yes.
Because
Yeah?
we need to do a business trip to check on the rental.
All right, the radio show.
I was just thinking
broadcasting
that.
live from Florida.
I'm sorry,
Soon,
I can't
soon.
go out. I can't leave the state till after April 15th.
You're on lockdown.
Bummer.
Sorry. And then we've got your home office, which is a tax deductible item for landlords, employees, and independent contractors. So whatever they're hiring somebody to perform those services, that's deductible.
What
as
number
well.
is that? Is that number 8?
That's number 7.
Number
Are you
7.
getting sick of my list? Is that what I'm hearing?
No, I like this
Oh,
list.
okay.
Keep it going.
And then 8, casualty and theft losses. Obviously, we hope those don't happen. But
Yeah,
if
I
they
don't
do,
really want to deduct that. I don't really want that to happen at all.
Right, but if it
we
does,
talked about that last week. If you have,
right, you don't want to pay for insurance either, but you need it, right?
Yeah.
So then you get benefits because you've paid for it. Insurance is also tax deductible, and then legal and professional services.
so legal and professional, that's at number 10. I have a question, Keith. Rentals, you hear about the headaches. You got to fix the toilet. Yes, that's tax deductible. However, if you have to file an unlawful detainer, evict a tenant, those expenses are also tax deductible.
Yep.
So you really can deduct a lot of things on your rental properties. So the burden that you have on that, if you look at it, if you're making money on it as a cash flow proposition, as you bought it and you rent it and you're making cash flow, the number of times you have, I own rental property myself, and the burdens that you have on it are, the benefit way outweighs the minimal occasional burdens that you do have. Of course, you have some issues that come up. Anything that happens in life, it's work. You have something that has to happen. You have to do something with, but the benefit way outweighs the cost of those burdens that you occasionally have. And if you have great people and good tenants in there, then they're even more minimized. And if you have long-term tenants, it's even more minimized. So what I got from this, though, is I do need to find a rental property in Arizona or Florida. I think that'd be great to go down there. And
A word of warning. Again, there's always a tax cloud over rentals. All rentals are considered passive. So if you're creating a loss from the rental, it's considered a passive loss. And if you're actively managing it, you can take up to $25,000 of actively managed rental losses. But beyond that, they may be disallowed. Currently, they will carry forward and be deducted at least when the property is sold, if not currently. But you're
okay. So if you have a large number of rental properties or a large passive loss, that's capped. So you cannot. So that would, in realistic terms, if let's say your income is $50,000 a year at your job, you have rental properties, and let's say you're trying to claim that you lose $50,000 passively on your rental properties, that would not be allowed, right?
you'd be limited to $25,000 of losses.
Okay.
And then that 25 phases out between 100 and 150,000 of AGI. So at 150,000 income, all your losses would be treated as passive.
And one thing you also have to consider when you're buying investment or have investments, or if you're self-employed out there and you have that, is you're trying to have a lot of expenses to show that your income is lower. However, when you go to try to buy a rental property and you want to get financing on it, you have to show that you have the money. So it's a double-edged sword there, or a catch-22, or whatever you want to call it, where you need to show you make money to get a loan, but then you don't want to show you have money so you don't pay as many taxes, right? So Keith can help you with those things. Lisa can help you with those things. Keith Mattson, 952-686-3510. 952-686-3510, local expert, very, very, very knowledgeable. I would encourage you to reach out to him and get an opinion or answer any questions you have tax related, no matter how complicated, right? Keith, sounds like you can deal with very complicated tax issues, right?
Yeah, by the time I figure it out, I can explain it.
Yep. Yep. Lisa Swanson, Envoy Mortgage, 612-990-2271, 612-990-2271. Come and meet her next Sunday, 10 a.m. at the Convention Center, Minneapolis Convention Center at the Home and Landscape Expo. Sunday at 10 a.m. She will be there. Robin Hartle, myself, will be there next week. Between Friday, Saturday, and Sunday, we will be there a lot at the expo. Call Robin for free tickets. She's with RE/MAX Results. Call her at 612-790-4385, 612-790-4385. You can also watch for Robin on KSTP. Is that Channel 5?
Yes, Channel 5 on Saturday morning. I'm going to be on about 8:40. They're going to be interviewing me in regards to the Home and Landscape Show. So we're going to talk about what my seminars are going to be about and the Home and Landscape Show in general. So watch KSTP.
So that's Saturday, the day of the expo, or the day of the expo. So that'd be the 27th. December 27th, KSTP. Watch for Robin Hartle on TV. Come and meet us all down there at the expo and have a Merry Christmas, Happy Holidays, and a great week. We'll be back. Well, I won't be back next. We will be here next week from the expo. Again, this is the Stockwell Roueche Show. I'm Jason Stockwell with RE/MAX Results. Thanks, everybody, and all the partners that were here today. Remember, love yourself and love others. Merry Christmas.